Hey everyone, welcome back to the channel. In today's video, we're going to see an exciting opportunity of investing into your real estate investment space. This is going to be your REITs. So this is the first time a property share REIT is coming for an IPO. The IPO is currently running. It started up yesterday. So many of you wouldn't know what a property share REIT is. So this is nothing but your real estate investment trust, just like how we have earlier. So these investments are something which are bound to big corporates. There are like big names in your REIT. So we have the biggest market cap owner, which is your embassy office space REITs. Then we have Mindspace, we've got Nexus, we've got Brookfield. So all these are like different REITs who just provide or who invest into real estates and they provide us in the form of dividends. So it's a company that operates and or generates up finances, income generating through real estate. So by investing in real estate, it essentially means that you're owning a large real estate property without actually buying it. So you would normally try to send some fractions of money, you invest some amount of money into that and you just try to get the benefits out of it. This is purely into commercial real estates. So where these companies would invest only into commercial real estate spaces like office spaces and warehouses, etc. So property share REIT is the similar kind of one where the investor gets an opportunity to earn from the rentals and the long-term appreciation of these properties too. And coming to the key facts about this IPO, so the important thing that to notice in this IPO is this IPO is like capitalizing almost about 350 plus crores, where this is purely going to be investing on their new platinum projects. So this is not an OFS. So the money is like purely going into the business expansion. So that's very one good thing of it. And the price band of this is like really huge. So it's not a normal ticket size. This is almost about 10 lakhs. So it goes from 10 lakhs and 10 lakh 50,000. So that is the price band for you to get even one single lot of that. And the money they are raising to expand their real estate portfolio, thereby to reduce their debt. And this company is also the first time they are investing into the SMEs. So they are going to go into small and mid-sized enterprises. They are not going into like huge ones. Whereas we've got these embassy suits and stuff where they try to spend a lot of amount into tier 1 companies. But this is going to be a totally different scenario where they are going to invest onto other small and mid-sized companies too. So even Property Share has got a well-diversified portfolio with their properties in tier 1 companies, which makes it attractive with all these REITs which are available in this market. The next question that comes is like, should you invest into this? Should you consider investing into this? I'm definitely going to try my luck. I'm going to apply for one lot and I'm going to, we are yet to see like what is the dividend they're going to pay, because this is the first time a company like this is coming into existence, and there is going to be a fixed income that's going to be distributed by these REITs. So they generate up income and they pay back to the investors in the form of dividends. So this means there's going to be a regular investment which is going to like returns that's going to come into you, and it's a great way of diversifying your portfolio besides your stocks and bonds. So we've got these two allocations in our portfolio, and this is another way of investing where you, instead of spending huge chunk of money into your real estate, you can try investing them into these kind of REITs. So with urbanization and a lot of IT spaces and increasing commercial spaces demand, this is well positioned in a growth phase. This company has got definitely greater positions to grow, and moreover this comes under the SEBI regulation. So that makes REITs really transparent and investor friendly. Anything happens, SEBI is there to take care of these things. In what way these SME REITs are going to be like different from your regular REITs? Because in the SME REITs we have the option to choose your assets, like where which company we are going to be investing into this. That is going to be like controlled by you. That's like controlled in SM REITs. In regular REITs we don't have that option. We don't have the option. The choice of assets is not there with us. Then we've got an investment strategy where the SM REITs are going to be on single asset approach, whereas in your regular REITs they're going to invest on multiple diversified assets, and these assets in SM REITs are definitely going to be leased. We are not going to be like investing on any land or land parcel or purchase of properties or which is under construction. Only those that are into rentals, that are generating revenue, that is alone going to be their prime focus. Whereas in your regular REITs, leased properties will be there, under construction properties will be there, even land is also going to be there under your regular REITs. And the size of the companies that they're going to be investing in is going to be like less than 50 to 500 crores. So small companies are also going to be in this bandwidth, whereas in a regular REITs, companies which are over, or the spaces which are over 500 crores, only they are going to be coming into those ticket size. So these would be the main differences between both of your SM REITs as well as your regular REITs. But both of them come under the listed category. They both are taken care by your SEBI. And the holding period of this is going to be like really small, just 4 to 5 years, whereas in your normal REITs is going to be a long term, at least 10 plus years for you to reap the benefits of it. And the minimum trading lot is going to be like 10 lakhs, where there is just going to be single units, like a single share you'll be able to buy from your Demat account, be it your embassy suite, or if it is going to be your other things like if you happen to see the chart of here, if you see this embassy suite, I can see that there is a lot of dividends which been given by the company. You could see here that this has been given in the month of August. So if you see here in this chart, you could see that in February they have given up a dividend, and again they have given up some more dividends, interim dividends, during the month of October. So this gives you a flexibility of getting up returns, just like you're investing up your firms, your real estate rentals. Here you are going to invest into commercial real estate. So for people who are passionate about getting rental yields in real estate, where you don't have the affordability to buy a big commercial properties, you can definitely go for these REITs. And if you happen to see here in Embassy Suites, you could see that they have got a very good ROCE of 5%, and their stock P is like 15%. And their dividend yield is almost 304%. It shows they are giving a 300% of dividend. And besides that, they are the biggest market cap holders, and followed by Mindspace, Nexus, and Brookfield. So these are some of the big companies which are there in REITs already, but all of these are focusing into large sectors, like any investments which are over 500 crores. But this is one of the kind. They are the first ones in the market. That gives them the added advantage. So they are having this added advantage of starting up fresh in the market into your small and mid-sized investments. So coming to the negatives, what we could find in the negatives is like just like every other REIT, they also have their own risk. So the first one would be your market volatility. So the REITs can definitely prices can definitely fluctuate depending on the interest rates and market sentiment. So if the government is like increasing up the repo rates or things like that, then definitely they're going to take up a toll. Then high debt levels, because the property share REITs has got some debts to manage. So they're definitely going to be, which is a big concern because of the high interest rate which is prevailing in the market. So that's one of the biggest thing. And if there is an economic slowdown in the market, that would definitely impact your rental yield and a proper valuation of the company. And so finally, to concise, if you're going to ask me, like if you're going to invest on this, it all depends upon your financial goals and risk appetite. If you have that urge inside you that you wanted to get up a commercial rental income, then this is definitely a go through for it, because the ticket size is going to be like huge, but the dividends that you're going to get from them is definitely going to be like more, because that's going to be a regular and long-term investment. Besides your stock as well as bond portfolios, the REITs is again an additional portfolio for you. And this property share REIT could be a great addition to your portfolio. So, but if you also keep a note on your market fluctuations and try to like deal carefully with these kind of things, because they are the first of their kind. There is no one else in the market. That gives them the added advantage, because they are going to be the bellwether in the market. So they are going to lead up everyone in the market. And things like this will definitely come up in the market again. There are more members to come into the market. So we are yet to see how this market is going to accept these kind of SM REITs, and we'll see how this company gets listed on day after, because they are getting listed on the 6th. There is going to be refund which is going to happen, and the allotments is again on 5th. So the IPO is there till tomorrow, and the listing is going to be on Monday, the December 9th. So you could definitely give your luck, and you could try if this is definitely worth investing into it. And if you like this IPO review, do leave a comments below. I would love to see like if you really like this video, and do smack that like button too, and I'll catch you up in the next one. Thanks for watching.